I mean, the CFTC would tell you that the banks are hedged on the other side of that short via OTC derivatives and physical gold that they keep in Singapore or whatever. And if the banks are reporting those numbers accurately and honestly, it's the only part of their business that they are reporting honestly and accurately.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and fortunately joined by guest star to the Arcadia Economics program, Dave Kranzler, my dear friend and compatriot, who's got his hashtag got silver mug over there in Golden, Colorado. And Dave, today we're going to dig into a handful of wild things happening around the globe, although certainly one of which is taking a look at how the short position by the banks has reacted over this rally that we've seen, which still leaves gold near the all-time high, silver back above 30, and a whole lot more going on. So first of all, welcome on in. It's great to see you. And how are you doing today?
I'm doing well. Thanks for having me on again, and it's great to see you as well.
Yeah, well, we certainly learned a lot more about you in our pre-interview today and some of the 28-gram silver coins and wild things happening over there. Although, Dave, if we're going to really get to,
28 grams per ounce, American ounce. We're in America right now.
I'm just saying you fell
America
for
that's
the
no longer the democracy.
he fell for the which way is more, the ounce of silver or the ounce of feathers.
What weighs more, a TON or a TONNES?
Well, Dave, come on, let's get to the important stuff before we dig into that
Thank
short
you.
position, because obviously the big news, I don't know if we've talked about this publicly yet, but you had a blast laughing at my Jets quarterbacking situation last year. And now as we're approaching the season, Zach Wilson, he does look beautiful in that Denver Bronco orange. And real quick, on a scale of 1 to 10 of excitement, you're at a 9.5, 10, 11. Where do we stand on that?
Over Zach?
Yeah.
I'm at a level 10 excitement for him to be named the backup.
Well, I'm excited when by what do we
You
have?
didn't want you
Week
probably didn't watch him play on Sunday. That dude
week
can throw the ball.
by week 4 here, when the Broncos come into the fortress of MetLife Stadium for the soon-to-be 17-0 World Super Bowl champion Jets. I'm looking forward to seeing Zach Wilson starting by then, and
What's the date for that game?
that is on September 29th.
No,
We'll see if
I have
there's a way
commitments
that we
that
can
weekend.
do an
Otherwise, I have commitments for that weekend. Otherwise, I'd fly in for it.
Well, we'll see if there's a way maybe we can do anyone in the audience who wants to watch online together and we can chat and make jokes. I did send Dave the ounce of silver that I owed him from last year, which he subsequently initially threw out in the garbage
This
before
was
I
buried in the bottom of the package. Who looks through the wrapping around a coffee cup? Who looks underneath it?
throwing out ounces of silver.
Am I
And
looking to make sure there's not any Florida cockroaches in the box?
well, I'm just pointing out the news as it is breaking here. And to get caught up, I guess it's been a month or two since we've recorded one of these days, Dave. But real quick, we are on Tuesday morning at 25.47 in the gold price. And again, I have 25.74 as the high of this run and of all time. Again, we have silver back over $30 now on the December contract here. So little adjustment there, but Dave, will dig into the short position in a minute. But any other thoughts first of what we've seen, where we saw the rally earlier this year, then we've seen multiple pullbacks, yet been a unique period in terms of where we stand here, and anything you'd like to share on that?
I mean, there's to me, the two most important factors are obviously the physical demand coming from the Eastern Hemisphere. And that includes both gold and silver. So that we didn't have that type of demand back in the first decade of the century when gold made its run from 250 up to, what was it, 1900 or something like that, whatever it was.
1920, I
So
believe, was a
yeah, so the I mean, I think the physical demand is putting a strain on the market, and there's no way we can actually prove that, but there's footprints in the snow that lead to that conclusion. Um, Certainly, when India cutting its import duty
Yes,
was a significant factor in July and August in pushing the price of gold higher, and also preventing the official price management of it in the derivatives market. So, and then the second factor is, and it's funny because everyone is focused on what the Fed's doing with interest rates, but I mean, that that in my opinion, that's not even remotely close to as important as what it's doing with liquidity. And it's been quietly increasing the money supply really since March of 2023 when it went in and liquefied the regional the regional bank crisis. And you can see that if you go to the monetary base, which used to be called MZM. Now they call it the monetary base for whatever reason. And if just click on like the 1 year chart and then pull the thing back to March 2023 down in the bottom there. Yeah, there you go. So yeah, the monetary base, and that's bank reserves and coins and currency in circulation. And you can go, the same website shows bank reserves. So that increase has been bank reserves. And that's probably the most powerful form of money supply because the banks, I mean, they used to be constrained to a 10-to-1 leverage ratio, and they removed that leverage ratio restrictions during the pandemic lockdown. So, that can be infinitely leveraged in theory. And then if you go to look at the M2 graph, now everyone posts on social media the year over year percentage change, but that's deceptive. If you go to the M2 and run a 1 year chart on that, it's been increasing since October 2023. And I think part of the reason of that is it's picking up the $2 trillion drawdown in the reverse repo facility. Now, a lot of that money was money market funds, and the government took advantage of that. That was the Fed could prevent that money from leaving the reverse repo facility. All it has to do is nudge up the rate that it pays on the funds. But the reason why it let it draw down like that, or part of the reason, was to help fund the government spending deficit. If you've noticed, and it's been commentated on, prolifically, the government has primarily funded its spending deficit with T-bills, less than 1 year notes or bills or whatever you want to call them. And the bulk of the funding for that has come from the money market funds, and so that's where a big part of that drawdown came from. Now that money eventually ends up either in the real economy because the government spends it, or some of it has ended up in the stock market. And that's in my opinion, that's what's caused this latest melt up in the stock market is the drawdown in that reverse repo facility, as well as the fact that even by its own financial conditions measurement, the financial conditions enabled by the Fed are the easiest since right before it started hiking interest rates. So, and that's why, I mean, if you look at a bona fide inflation index, that's why inflation is still out of control, regardless of what the Fed says.
Yes, I agree. I've actually been enjoying looking at the Chapwood index a bit more recently, and where they actually take a basket of goods
Is
that
that one, is the Chapwood index, is it current? Because I know there was a time when they stopped publishing it.
I believe so. I can take a look here. Certainly higher than the numbers reported in CBI or PCE. Here you see the
Yeah, I think that goes
2023
to the end of 2023, doesn't it?
What's that?
Doesn't that is that current, or does it just go to the end of 2023?
I think it just goes to the end of 2023.
Yeah, a better metric is the Shadow Stats CPI alternative calculation. And all he does is he
Right.
goes back and recalculates the CPI the way it was calculated in 1990 and also in 1980. And in his last email update, he actually included a page where he showed exactly how he does the calculation. So, and I think the 1990 methodology shows inflation around 8%. But by that point, the index had already been dumbed down by quite a bit. And if you go back and look at the 1980 calculus alternative, inflation is more like something like 12%.
Well, those were the days
That's
before.
probably that's more akin to what I'm experiencing in my spending. I don't know about you.
Yeah, well, people can look up the Boskin Commission. That was one of the groups that made the formula better. And here, the Chapwood Index. Yes, Shadow Stats also great, just as an alternate one if people want to take a look. Measures the actual cost and price fluctuation of the top 150 items which Americans spend their after-tax dollars, and they provide that list in there. So feel free to take a look at that on your own time. And Dave, real quick before we get to that short position, did want to touch on something you mentioned here, the reduction in the import taxes in India. And this was from World Gold Council. They have someone who writes about the Indian market each week, which I've been finding helpful. And I'm going to read this part here because she mentions the significant cut in the import duty on gold and the decline in the landed cost of gold had been a shot in the arm for demand in the country. Anecdotal reports suggest strong buying interest from jewelry retailers since the duty reduction. And at a recent jewelry show, manufacturers noted substantial increase in order bookings from retailers who are preparing for festive and wedding season, which goes through December. In some cases, these orders have reached levels not seen in several years. Additionally, the trend of bar and coin buying remains strong, supported by consumers as well as jewelers who are capitalizing on supportive gold prices. I'll mention that on the other hand, India traditionally a price-sensitive buyer, so somewhat of a counterbalancing factor. Although with the reduction in taxes, has also helped to bring the prices down. So thank you for pointing that out, Dave. And
Forget the World Gold Council. That's like the CPI index of reporting on gold. It's dumbed down. So the Jerusalem Post, and I'll send you a link, wrote an article on August 19th. Gold rush in India, duty cut ignites massive buying spree. Now that's more accurate than what the World Gold Council's
well, I
putting
think
in front of us.
they were saying the same thing, but alternate
No,
versions in
but
the
it
market
ignites
always
massive
good.
buying spree.
Well, multiple sources, and we have Dave's pick on that one. Although, Dave, we would like to get your picks. I don't know if we're going to get your football picks this year. I think that would certainly be pretty exciting. So, Dave's Football Friday picks. But more importantly, here, we'll stay focused. Here is the gold price over the last 5 years. Our green bar down here, as you can see in this table, is the swap dealer's position. So we can see they've gotten a bit short, 242,000 contracts. Now you see slightly about that same level back here in April of 2022. That was when the interest rate hikes began. And we have the pattern that most of the time when the short position gets that large, you see something like what you saw here, and then the price at a peak of 2071 and down to $1,600. One time where that diverged, and we have a viewer. Let's call him Doug. Doug K. This one's for you, who wanted to know your thoughts on this. Because if you go back here, we see that the short position was pretty big there, and gold went from 1500s. This was back during the COVID time to over $2,000. So often the banks end up being on the right side of this, not always. And at least as I've watched this rally unfold, we've seen the short position, both gold and silver, grow as the price has gone up. Seen some short covering at times, perhaps more so on the silver side, short covering by the banks, to be specific. Seems to me it's like we could either have a cascade down at some point, or there's the possibility that some of those banks get overrun like they did in 2020. And anyway, long question, I apologize, but what do you think about all that?
Can you take that chart back to 2008? Because they had a large short position, net short position, going into the fall of 2008. and a big part of what drove the run up was short covering. So I mean back then that was a big short position for them, not relative to now. I mean, the CFTC would tell you that the banks are hedged on the other side of that short via OTC derivatives and physical gold that they keep in Singapore or whatever. So I don't know.
CFTC has
I mean,
also fined many banks for evading reporting messages on WhatsApp, for spoofing, and a whole bunch of other things. And
yeah, the spoofings, who cares about that? That's not the real manipulation. Or let's call it price management. That would be the woke term for it. Price management. That's not the real spoofing's not the real source of. And you know they're going after low level trading desk guys. I mean, we're talking about decisions about what these banks do that are made in conjunction with the Fed at the highest level of these banks. So, you know, just like everything else, you know, the whole situation is just completely corrupt. So, to be honest, I mean, probably over the last 10 or 15 years, I mean, I used to like the first thing I would open up every morning, you know, between 2001 and 2008 was the change in open interest, you know, the daily change in open interest that the COMEX puts out. And I mean, now it's like I look at it occasionally, but it's, you know, I don't pay a lot of attention to it because I mean, who even knows if those numbers are accurate, right? I mean, what's the ultimate source of those numbers? It's not the CFTC, it's the banks. And if the banks are reporting those numbers accurately and honestly, it's the only part of their business that they are reporting honestly and accurately. So that you know that's my thought on the commitment of traders report. I mean, I look at it, you know, and yeah, sure, it probably can tell you in general what the banks and the hedge funds are doing, but I don't trust the numbers.
although, do you think that general takeaway that they have continued to get short on the rally is at least approximately whether to the contract as reported by CFTC? Do you still think we're in a situation where there's some risk? I mean, the banks would be losing money if the prices keep going up from here, and then you see that dynamic where there's could be a sharp move in either direction based on what
Well,
you believe is the setup and
we
positioning in the gold
we've
market.
had those sharp moves on an intraday basis, or you know, it might last a day or two, but historically, those moves would last a couple months, few months, right? You get the initial shock and awe smash in the price, and then you know the hedge funds would liquidate their positions. What what I've been noticing over the last, I don't know, 9 months or year or whatever, is that those smashes are very short lived. I mean, we just had one, right? I mean, they tried to push silver below 27 and it snapped right back, and now we're over 30. And we're talking December basis, not the phony Kitco spot price. Um, and same thing with gold. So I mean, it seems to me that regardless of what their net position is on the COMEX, that they're having trouble pushing gold and silver lower and keeping it lower. And that's kind of you know, say the last, and maybe even like the last 18 months. I'd have to look at a chart. And that's kind of a unique situation relative to the last 23 years, which is how long I've been involved in the sector.
Okay. And do you care to offer a forecast of what you're expecting for the second half of the year here? Or I guess we're already in the second
I
half.
mean, what I like to tell people, I mean, I get subscribers asking me all the time about, you know, where I think it's going, where it'll be at the year end. And I'll just say, look, man, I don't know what price path gold and silver are going to take between now and New Year's Eve. I just am confident that they'll be significantly higher because we're going to get some rate cuts, right? For sure. The September meeting, I forget when the next meeting is after that. And they'll probably have to cut rates again. And I trust me, they're not cutting rates because they're concerned about whether or not Ma and Pa America can put food on the table or is having trouble paying their mortgage. They're cutting rates because there's a big liquidity problem that's percolating in the banking system. And that's why they're cutting rates. And that's once the that reverse repo facility that everyone, I wasn't, but everyone was predicting would run dry in March, still has north of 300 billion in it. And but once that the rest of that bleeds out, that's when I think they'll have to start printing money. And they may even have to start, well, they've already been printing money. I just showed, we just discussed the MZM and the M2 charts. But they'll have to overtly, I call it a stealth QE. They'll have to overtly start printing money again. And that may happen before the end of the year.
Alrighty. Well, I think that is
Let's just say gold will be higher than 2,500 and silver will be higher than 30 at the end of the year. How's that?
precise, specific, and I guess you're going to have a similar comment about the data, although something that I've been wondering about and we've seen play out is that, like you mentioned earlier, most of the rally been driven by the East. And what does it take for the West to get involved? Maybe it is as simple as when they start cutting rates, then that's, whether you're right or not, what triggers the Western response. And at least according to the data that Nick Laird collects over at Gold Charts or Us, we see blue bar shows the amount, the millions of ounces in there. And we see since, let's call it, we had that spike earlier this year. And then in late June, we've seen inflows similar in the gold side, where started to see that amount increase after 2 or so years of solid outflows. So do you think the West is finally coming on board? We've seen slow conditions here so far.
I mean, uh, this idea isn't unique to me. I mean, James Turk first exposed it in 2004 when the S4 was originally filed for GLD. And if you go through, which I've done, I wrote a piggyback article in 2009 about it. If I ever have time, I'm gonna update it because they've made the prospectus. They've even made it easier for them to engage in chicanery at SLV and GLD since 2009.
Well,
I
they had
mean,
those
if
great
you if you
changes in the
believe
middle
those
of.
if you believe those numbers, which a lot of us do not, then yeah, there's more gold in GLD and more silver in SLV than there was 6 months ago. I do believe that drawdown, but I think that actually accurately reflects what the real state of condition is in the SLV vaults. Again, who manages SLV and GLD, right? So JP Morgan, I think they weren't they just added as a co-manager of GLD also, but JP Morgan has always been the custodian of SLV,
Yes.
and HSBC was the custodian or is of GLD. And those are two of your most corrupt bullion banks. So again, I mean, if you trust the numbers, then yeah, you're going to think that, oh, the West is starting to get on the gold and silver train. I, I don't trust the numbers. I do think that there's a lot of wealthy people in this country. Not all of them. There's probably a lot that still, are high on the fiat gravy train, but I do think there's a lot of wealthy people in this country that are probably buying a lot of gold, probably storing it in Singapore or Liechtenstein or wherever.
Yeah, and obviously you mentioned the prospectus, and we had those incredible changes that occurred that Silver Squeeze weekend, where they were changing the prospectus of SLV to show the
I
outclass
rest my
if
case.
there is a short squeeze, while Jeff Curry's going on TV, left, right, Bloomberg, CNBC, and saying short squeeze is impossible. The contract language stated otherwise. So anyway, Dave, last one for you. Obviously, you're an expert in the mining stock arena. I mean, they've rallied this year. It certainly does not seem like we're in mining stock mania. Anything you could share there, where you see us at in this cycle, if you're seeing money come into the sector, or anything else you'd like to pass along?
Sure. It's interesting because actually the largest cap mining stocks, the well-run ones, not Newmont or Barrick, but the well-run ones have actually had, a nice rally over the last several months. Um, So and I think that's professional money flooding into the biggest and most liquid stocks. I mean, obviously, Stanley Druckenmiller, who used to run the Soros Quantum Fund, that's where he made his fame and fortune. He announced that he was buying, I think he bought Barrick and Newmont. And then there were a couple other large, well known investors. One of them actually announced that, I can't think of the guy's name off the top of my head, but he announced that he was raising $1 billion fund to make direct investments either in mining companies or individual mines. So there's the smart money is starting to flow into it, but because of the relative illiquidity of the smaller cap mining stocks and the junior project development stocks, it's hard for large funds to, Fidelities and Vanguards, et cetera, to go into those stocks. So eventually it's going to happen because at some point, I mean, if like I'm
You're the nimble David versus Fidelity's Goliath. It's so perfect.
stop.
Look at you running, like sneaking through in between their
Well,
legs
Crescat
and
Capital, and
like
I don't know how much money they run. I mean,
circling
they
around where they
make
least expect it.
Crescat Capital. I don't know
Very
how much
exciting.
money they run. They're here in Denver, and they're investing in a lot of junior but that they'll take 10 to 20% equity positions in these companies. So they have a big position. I didn't even know this until recently. They have a big position in Cabral Gold, which is probably it's well, that and Viva Gold are my two favorite risk return plays. I actually am starting to think Cabral's going to be at least a 10 bagger over time. So, but I just they just did a tweet about Cabral earlier today. So there is institutional money going into the juniors, but I think that we have the massive moves that we enjoyed between 2008 and 2011 are still ahead of us in the smaller cap mining stocks.
Well, that certainly is good news to hear. And fortunately, if someone wants to know more about that or any of the other brilliant things going around in Dave's beautiful brain, we have the Investment Research Dynamics site where, and I got to call you out again. We made the picture with him backing up a silver truck, but he went back to fiat. I don't know what that is about.
You know
If you
what? I
want to know
have to
why
pay my
Supo,
web manager to put that picture up. So I'll make you happy and do it eventually.
although fortunately, while we can debate the art choice there and the fiat, if you do want to know why Super Microcomputer is a bag of fraud, I I I love the delicate titles because I know you're sensitive about how some of the companies might feel, and you often sugarcoat things. But we have the Mining Stock Journal as well as the Short Sellers Journal, and of course on the Mining Stock Journal, Dave, I'll sell it for you. You get insight like this, where Janet Yellen goes by begging to China for them to buy something other than U.S. Treasuries, and let's take the gold. So. Dave, anything else going on at Investment Research Dynamics you want to pass along today?
I mean, nothing new. I got, I just released a new issue Thursday, which is probably still sitting in your inbox with some good ideas. And I'll have a new issue a week from this Thursday. So, but other than that, nothing exciting. I mean, but wait a minute. I mean, what's happening in the precious metal sector is exciting. So,
Dave, everything that you do is exciting. And Dave also has the Short Sellers Journal. So if you want to, kind of reminds me of the old risk reversal option trade where let's get along the mining stocks, short the rest of the stuff. And although I think it's been a good year, it's been more so on the mining side, but either case, Dave, I appreciate that you
Tesla
wrote.
short's been a great ride this year.
Yeah, yeah. So that's the kind of stuff that you can find out about in the Short Sellers Journal at investmentresearchdynamics.com. And Dave, I appreciate you making some time. Always fun to catch up with you, and we'll do this again soon, my friend. Should be a fun rest of the year, and let's go Jets.
Thanks for having me on, Chris. Always a pleasure.
All right, I will wait. There's one last thing I did need to mention, end this on. Thank you, Dave Kranzler, Investment Research Dynamics. Look forward to seeing Zach starting week 4 against the Jets. Thank you, everyone at home, for watching. Hope you had fun today, and we will see you again tomorrow.